Hey traders, welcome back to another Sunday video where I'll be taking a look at some of my top setups for the week ahead. We'll be taking a look at indices, commodities, Forex pairs, and much more in this video, especially with what we saw on Friday, which was some very sharp volatility towards the end of the trading week. I'll be covering all of that, both from a technical and fundamental basis. All I ask is that if you enjoy my videos, hit the thumbs up button down below and let's go ahead and get started. So I'm going to be taking a look at a little bit of everything today. As you can see on Friday, we ended pretty red for some of the indices. And then, commodities a little all over the place. Oil had a spike back that we need to talk about. Cryptos had an interesting weekend. Trading, of course, trades 24 hours, 7 days a week. And we'll take a little dive into currencies as well, with the dollar gaining some strength on that tariff news. So we'll be talking about all of it. I also just wanted to make sure that I give a bit of a heads up here. The 30% off Edge Finder discount sale is going to be ending soon. If you have not already picked up your copy, take advantage. You can see on the screen right now the code YTVIP. That will get you a substantial discount on the product. And just a reminder, that's a one-time payment to get access to our work. We've been building tools in the Edge Finder for the last few years and have come a very far way with the tool. You can get everything from our sentiment analysis data like the Commitment of Traders report, retail sentiment, seasonality, economic data, and heat maps, our top setups algorithm, and so much more. If you plan on taking your trading seriously in 2025 and you are looking to up your fundamental game, it may be worth taking the dive, making the one-time investment, and getting yourself the right tools to set yourself up for trading success this year. So let's take a look. First of all, I actually think we have an easy starting point today in the US indices. And actually what I can do here is I can select category and then select indices. And very interestingly, what you'll see is that we are getting a perfect all bullish reading for indices. Now, this is not a new signal. The Edge Finder has been very bullish on indices the last few months, but this is really interesting to see literally all of the indices on the Edge Finder's algorithm are actually pointing bullish. Dow Jones, S&P, Nikkei, the DAX. So this is, of course, Japan and German and British, stock market as well. NASDAQ and the Russell. I have not seen a Russell bullish signal in quite some time. I'm thrilled to see this. Again, we're getting some nice confirmation. And what this is telling us, the high score, is just indicating that the Edge Finder is saying, look, most of our readings here are pointing in the direction of possible upside for the indices. Now, I do want to just clarify, just make a stop point here before we get into the technical charts. Look, this is really important that we understand this is not a certainty that indices are going to go higher. We don't want to make dumb mistakes and over leverage just because we're getting a good signal. But it does mean, hey, I'm going to be very attuned to looking into the indices and let's see if we can find some proper setups. In fact, while we're on that, kind of train, let's go take a look at the technical side and see if there's any entries. Now, I already have an existing position on the S&P 500, and I need to address something right off the bat. What the heck happened on Friday? Huge sell-off to end out this incredible week that we had. All of it went away in the blink of an eye, right? You had just last week, oh my gosh, guys, let's take a look at the weekly chart for a second. And you can see we had this very large-bodied candle here on the weekly chart, or I guess large range. The body itself was actually pretty small, but you had a very sharp push lower in the early session of the week. Monday, we had the big DeepSeek fears and markets actually came down and retested this trend line that we've got drawn. And very quickly, markets started to rally off of U.S. Key company earnings that came out, like Microsoft, Apple, Meta, and Tesla this week had some pretty overall, we'd say pretty good earnings, still supporting the AI trade, and the markets rallied back. But then on Friday, what happened? What broke this down to end out the week in the afternoon? Well, the big thing here was that there was some announcements from Trump that there would in fact be the tariffs on Mexico and Canada, but that there would also be immediate tariffs being placed on China, 10% tariffs. And that many had actually hoped that that was going to be pushed out until March and further out. But in fact, we are now seeing that put into place immediately. So the markets are like, uh-oh, so now we're actually getting into tariff zone. And so we sold off. To be completely honest, I said this on Friday and I'll say it again. And I said it last Monday and I'll say it again. The headlines for 2025 are going to be crazy. Get yourself ready, buckle up, and let's, I know this sounds overly simplified, but let's just stay with the data. Let's not focus on what Trump said or a tweet that he made or freaks out about. Again, nothing for or against Trump on this channel, but we want to pay attention to what we always have, right? If you've watched my channel, you know I share my broker statements. I have made good money in the markets over the years, sticking to what you see me talking about on the screen right now. I look at the economic data, technical and sentiment data. This is my bread and butter. I don't need to be reading Trump's tweets to be a profitable trader. So again, nothing for or against Trump. I'm just making the point that I can focus on what I can control and what I can watch closely, which is the economic data, and I've built a system around that. I'm not going to abandon that just because markets are crazy. So when I see, this big sell-off, let's go back to the drawing board. What do I have in my system? Remain bullish. This has made me a lot of money watching this exact top setups algorithm and being disciplined enough to wait for the right setups. That's how I make money in the markets. So I'm not going to abandon that system just because the markets are a little bit more volatile. So I'm going to stay in my trade here. Now this could end up being a small loss for me. I actually trimmed my risk. Initially my risk was here. I moved my stop loss and just decreased my risk on the trade. I'm sitting on a very small gain on this S&P 500 trade, but recently closed out a very profitable one from this swing low up to this swing high. You can go back on my channel if you want to go watch that trade. In fact, I recently made a video about that trade start to finish. So when we look at indices, I am going to remain bullish until further notice. I'm just going to stay with the trade here, right? So I have this key area of support that's been holding well. I'm looking for this thing to continue to push off, and I would not be surprised, despite the headline fears, if we see new highs. We have good, strong earnings. We have an economy that looks good overall. We can check our heat map here. Right here, you can see, boom, look at this, right? So we've got mostly blue on this screen. Let's take just a quick pulse check here, and you can do this yourself if you have a copy of the Edge Finder. Check out the new economic heat maps. We have them currently available for US and UK, and we will be having them also for EU, Japan, and possibly maybe in the future China as well. So all of that is coming to your Edge Finder if you have a copy already. So check this out. So again, mostly blue here. We've got growth that looks pretty strong, inflation that is not spiking higher, right? So inflation is not, rapidly rising. In fact, it's come out lower than expectations in recent times. So I'm okay with this. This is an environment I buy stocks on dips. And so that's what I'm going to do until it's time to abandon that game plan. Let's not get too smart, right? Let's not try and call the top of this market. We are in a very strong overall bull market. And until it's time to change direction on that, we need to stay with the trades here. Again, that's what I'm going to be doing. You do what you want. This is not financial advice. I'm just sharing my opinions. I've also got eyes on NASDAQ and the Dow Jones and the Russell. So I like US indices a lot. That's my bread and butter favorite thing to trade. I'm going to be looking for NASDAQ to do one of two things. Either come down and test this key area of support once more. I've been keeping this on my screens here recently, looking for a pullback into that area of support as a possible buy the dip opportunity, or a momentum trade would be looking for a breakout and retest of this key area, the all-time high. So I'm looking to take either trade in the coming week if they set up. Both scenarios I like quite a bit and remain adamantly a buyer of this market on dips. I'm not going to get scared out of headlines. And if something truly changes that impacts, again, my system will tell me when it's time to no longer be bullish on indices. I hope that makes sense. That's pretty much where I'm going to leave it with indices. I predominantly stay bullish on them. As long as my system is giving me the green light on them. What you'll notice, and we may get into it in this video, we may not, the commitment of traders report has actually greatly improved for a lot of the indices overall. Some of these were red last week. We now see, a +0 score. And what I can tell you about that without getting too far into the indices here is that we saw some buying on the indices according to institutional money. Institutional money bought NASDAQ. You can see they added long contracts and they added just a very small amount of short contracts. That is institutional money flow straight up on your screen right now. So what we can see here is SPX. What happened here? Well, they decreased their longs. So you would say, oh, that's bearish. But look what they did with their shorts. They greatly decreased shorts. So short exposure on a net basis, this is all of the non-commercial contracts traded. And what you can see here is there was significantly more short covering than there was closing of longs. So we take that as a bullish week. And again, take it for what it is. But what I see here is institutional buying is still alive and well when looking at the indices. We'll put it there, but that is again where I'm going to continue to keep my focus. I'm not going to change my plan just because headlines are scary sometimes from Donald Trump or from, what's happening there. And again, I just want to reiterate, I'm not saying anything for or against Trump, but whether you like him or dislike him, we all know Trump is not the standard politician and he says his mind. You might like it, you might dislike it. The point is he says his mind. The markets can't see exactly what he's going to say next, perhaps as much as they can with other standard politicians. And so the market doesn't like that uncertainty, and so it freaks out sometimes. That being said, remember, under Trump the last time, the stock market had a very strong 4-year period, barring the COVID sell-off that was global, and I wouldn't really necessarily say that was specifically Donald Trump's kind of problem. But anyways, with that said, NASDAQ, S&P, I remain bullish on the indices. This is kind of far off from a setup for me, but the GER40 index, I marked this up here recently. In fact, let me pull up my 8-cap variation here. Love this setup, but can't quite pull the trigger on it until we get a pullback. This is just the DAX, and I do like it quite a bit, but it's a far ways away from an entry point. Love the setup, just not quite ready on the timing. So I'm going to keep that on my watch list to see if we can get something there on that bullish reading that we're getting from the Edge Finder. And just a reminder, like I said, the Edge Finder is currently 30% off, for a limited time. If you do want an additional discount, send us a direct message on our website. Head over to a1trading.com. Chat with us live. We give extra discounts for that, just for special perks for subscribers. Anyways, let's keep going here because we've got more stuff to look at today. I want to also take a look. Let's remove our indices and actually quickly just see what metals are looking like. On a metal score basis, we've got silver getting a bullish reading, which I love because I currently have a bullish trade on silver. So let's take a look at silver and just see where we're at with this. So what I loved about the silver chart here is you had this kind of technical breakout to the upside here recently. In fact, dips on silver may be interesting. You've got this key area here. If we take a look at our support zones, that this may come back into to test here on Monday. We'll see, but big spike up here for silver. Pull back into this area looks good, in my opinion, for continuation. Again, just trading based off the system. We have most of our indicators pointing bullish. Silver and platinum both getting readings. Neutral for gold. That's going to keep me out of the gold trade at this time. I want to show you something too. Retail positioning. We've had a lot of questions about this here recently. We changed retail positioning for the metals and for indices to use the put call ratio. I have talked about this for a long time on the videos and streams. We got it going. The put to call ratio has officially added silver, QQQ, which is NASDAQ, GLD, which is gold, DIA, which is the Dow Jones, and oil. You on your Edge Finder can select any one of these and look at the put to call ratio to see truly what the options market volume is looking like. So let's do gold, for example. So gold is showing you here when this chart is getting really low, that's showing you that the demand for calls is incredibly high. In fact, it's reaching an extreme. And what I found so interesting, I made this video yesterday in our Telegram channel. By the way, I've been uploading public service announcement. If you're 13 minutes in, make sure, if you have not already joined our Telegram, completely free to join. It's in the description down below. The reason I say this is I'm going to be dropping some more extra bonus clips and videos in our Telegram channel. But I said this yesterday in our Telegram post. Look, gold had an interesting end of the week. It kind of did this. It ripped, and then let's say this is Friday's price action. Friday's price action did this and then reversed, which was interesting, especially when you kind of coincide that with some weak COT data. I thought that was really interesting. But check this out. We look at the put to call ratio. We've selected gold on our chart, and what we have here is extreme greed or high call demand reaching extremes on gold. All that's telling us, guys, is that the volume side for calls is very, very high in the options market. And the options market, there's a lot of gold or GLD or gold futures contracts traded on the options market. So it gives us an excellent, insightful read on market sentiment on gold. So when I saw this on Friday and I was like, well, hey, look, call volume's getting really excited. And sure enough, intraday, we got a large pullback on gold. So I caution the gold bullishness. I'm not necessarily a bear. Trust me, I'm not a bear because, again, I'm a systematic trader. I look at this and I say, look, we're neutral. What does that mean? Does that mean bullish or bearish? Somebody asked me this. They said, Nick, if something's neutral, though, does that mean you're bullish or bearish? And so after I banged my head against the wall for 20 minutes, I came back and I typed politely, if something's neutral on the edge finder, that means I'm probably not going to take any trades because it's neutral. Again, I ran my car over my foot on purpose after reading that comment, but it is part of the YouTuber career path here, I suppose, in the trading space, is you have to deal with some interesting comments. We're not going to call them dumb. We're not going to call them crazy. We're going to, anyways, moving on. Gold neutral, right? So we take a look here and we say, look, if we can pull up that put to call ratio, actually, some of you guys who do have the edge finder already, I hope that you've checked this out. I was so hyped when we got this added, but you may also enjoy this as much as I do, and I hope someone does, because we work on these tools all day long. Other people getting enjoyment out of them like I do makes my day complete. But so when we look at silver and we look at gold, what we can see here is that metals have been very popular for calls. Now, that does not mean it's a necessarily like, oh, time to abandon ship. But the way we've programmed our system, guys, is when we get a reading that is below this threshold, it starts sending up warning signals in our retail sentiment score. So what that means, look, all around here, this is perfectly fine. That's good, perfectly fine, healthy sentiment. When we get underneath here, that is telling us that sentiment is reaching some extremes and that it may be time to at least hold off on new long positions. That's how I read this. You read it how you want. That's how I read it. If I take a look at the top setups and we filter back, let's get back on our path here. You'll see retail sentiment is getting a -2. Why? Because the edge finder has automatically, systematically calculated, oh, we're reaching some extremes in the put to call ratio. Let's give some more pushback on this bullish reading. Guys, if we were on the opposite extreme and this was a +2, guess what? You would have a bullish reading on the edge finder, right? Because that would be a difference of 4, right? Because we would be not -2 here, but +2. That would give us a +6 score. That's a total reading of +6. That's a bullish reading for gold. We don't have that, right? So what's holding me back right now is this retail positioning and some of our economic data suggesting the U.S. economic outlook is still pretty strong. So again, I'm watching gold closely. Trust me, I watch it every day. But that is going to keep me on pause at least until now. For now, there's your gold update. Hopefully that was helpful to you. Let's also take a look at some major currency pairs while we're on the subject. Getting a lot of neutral readings here. Maybe not as exciting as it was a couple months ago, but noticeably Euro USD, Aussie dollar. That's where I'm going to stick here this morning because, or this afternoon, depending on when you're watching this. But check this out. The Australian dollar and the euro dollar. Those are going to be two readings where I'm getting enough confirmation on my system to tell me, hey, look, let's watch this. Now, of course, when I show you guys a score on the Edge Finder, these scores are changing, right? This data is all coming in throughout the week. So this is the score at the time of recording this, but it could change. So if you have a copy of the Edge Finder, you'll want to check that just to make sure that your Edge Finder is showing the same data points as mine. Otherwise, things have probably changed since I recorded the video. So euro dollar still looks really bearish, man. This looks like a beautiful downtrend continuation story. I think a lot of people are starting to think, hey, look, euro dollar is going to really rip, and maybe it does. Maybe we get a change of something, but especially with that tariff news, that just adds more fuel to the flame here to the downside, in my opinion. I can't really sell it here because we've already seen a little bit of a move off of the area I may have looked to sell, which was this 1.06 zone. But if you do get a tap up into this region once more, this may be an opportunity, in my view, to continue the sell side action on euro US dollar. So that's my opinion here. Again, going to stick with the system. Euro dollar is the call for me on this one, to the bearish side until something flips. Aussie dollar, the other one here is, of course, this currency pair. I've been watching this level for a retest of 63.30. If we can get a spike up into that region, to me, the chart here continues to favor downside. Even though we've kind of entered into more of a consolidation phase, I still like the downside for Aussie dollar and euro dollar at this time on the currency front. So there you go. That's pretty much the majority of it here. Last thing I will mention is Bitcoin. Look, Bitcoin is getting a +8. I'm still long Bitcoin. I'm recording this on Saturday evening, so it may be a different time than when, or price may be a little different by the time you see it on Sunday. But we've consolidated here. We looked good going into the end of the week, and then just completely flopped on our faces. Stayed flat for the entire week last week after all said and done. So I'm still long. I still like the long side for Bitcoin, but it's getting to be a point where it's like, okay, let's prove it, right? Can we get a break through those highs or not, right? So if we get a break through those highs, I know what to do with this position. I also know what to do with this position if we break the other way. It's time to close out and take profits. That's the way I see Bitcoin. I'm either going to get stopped out for profits here this coming week, or we chopped around, or we break out, in which case I'll take this stop loss and I'll move that further into profit. What I'm looking for, I've said this over and over, but for Bitcoin, here's my signal personally. Can I get a break and close above this level? If so, stop loss goes there. That's the next game plan move for me on my Bitcoin trade. For those of you who are on our Discord, I'll be updating my positions there throughout the week. Any new trades that I take or positions that I am, kind of currently managing. So all updates get sent inside of our Discord server. If you're a VIP member, you will get those call outs sent directly to your phone and desktop. The information for that is in the description down below if you'd like to purchase our Signal service. Additionally, like I said, just a fair warning, that EdgeFinder discount is ending. Get 30% off with code YTVIP. Thank you guys very much for watching this video. We will see you back next time.